Good morning, everybody. Happy Thursday. Welcome back to a little daily profit plan. Today is going to be interesting. So let me get the screen share up and running for Zoom. Chat's open as well. And let's have a look at everything. Markets are a little bit softer. They're coming off these lows a little bit. We were down as low as 76.60. I have noted for this last couple of weeks that below 7,700, things looking pretty vulnerable. And we will see what today gives us. So perhaps the market is going to be contained. I actually just finished up a prep session this morning. And I thought, well, we might end up finding a low and heading back to the daily VWAP today. Maybe. Looks like the market may be on its way to doing that right now. Taking a look at the tape this morning, we are negative gamma below 77.20. We've had very quiet price action. It's the day before OPEX. The move by the Treasury yesterday, I feel like, is going to start rattling things loose. Maybe for better, maybe for worse. I'm not sure. But if we take a look at the 10-year yield, it's right back up where we started yesterday. So that entire move by the Treasury pretty much doesn't look like it did anything. 20-year, same thing. 30-year, same thing. So, I mean, maybe it fades. Maybe it's a push back down to fresh lows, and that will be, it remains to be seen. But I think overall we're still very vulnerable below 7,700. And we have a couple of fib levels. I'm looking left on the chart. There's room for this correction to pull back into these two ridiculous running candles. That was that Monday, Tuesday rip. But if we pull back to previous highs here, or pull back to previous highs here, or pull back into these candles, I think there's still vulnerability to the downside. Now, we might be very choppy. We might be making fresh lows, pulling back, fresh lows, pulling back, fresh lows, pulling back. And it might be this, like a little trend line action, right? And the market finds the 50-day moving average. What has me more concerned is that if we come down to the 50-day moving average and we don't bounce hard off of that we are going to be vulnerable with maybe a retest of these levels. And since we made fresh highs, that pullback gets a little bit deeper if we come back to June lows. Okay. So where we are at today, 7675. We have a expected move around it. Well, it was up to about 43 points this morning. This smart range is up to 43 points now. It's reduced to about 36.7. So I'm using 44.28. I pulled that from the smart range this morning. Brokers are very low today. Here is SPX on the day. SPX is 30.71. It's really low. But pre-market prep, end of day was 31.43. Pre-market's 25.44. So unless we have an aggressive opening bell move that would distort this, we're still looking at about like a plus or minus like 30. I mean, this right now is about 35 points, plus or minus 34 to 35 points. Now, could that be exceeding? Sure. I mean, if price comes back down, we get the VIX to rally up to 16 plus, we could have more downside pressure, but the market's already down about 0.5%. So this fall so far, we're trading at 0.45% lower. Here's what's going to be disappointing to me. Disappointing to me if we have another flush lower, just like we did here. So we gapped lower, didn't go anywhere on Tuesday. Okay. If we gap lower again and we go nowhere to the downside. I mean, in fact, if we go nowhere, like we open up and we just go like plus or minus 20 points the entire day, that is going to be extremely frustrating coming into OPEX tomorrow. So usually, options expirations, it's really not as volatile on Friday, the day of OPEX. It's usually way more violent the day or two before. So like, I mean, yesterday was a little noisy, but still like very efficient day. Yeah, we'll see. I mean, it looks like we've got prices somewhat contained around the 76.50 zone, but I'm looking for a butterfly area around here, around 7,600. in case the market does decide to make a break for fresh lows, like 7,600 could be a round number. It's not a huge sell off. If we hit 7,600, that's like a 1.3% move, I think. So from the close yesterday, if we hit 7,600 today, that would be a 1.4% sell off. I mean, it's not a monster move. It's like that's an ugly day, but we're 0.4% already. Does it get worse on the day? We'll find out. Did I win the day yesterday? No, it was a small loss. Small loss. I lost $160 yesterday. So I do have a master class today for double ups. It's going to be at 11:15. We're going to go very, very slow. Okay, you jumped in to a master class yesterday that was like very trade heavy, and I was just like throwing the concepts like right down your throat, and I acknowledge that. So we're going to do a very slow process, like very digestible master class today. And I'll just give you like why was the day not a winning day yesterday? It was, and truthfully, it was so close to a really good day. Like I lost $163 yesterday as a net result, and we had a winner on XSP, which was fine. We had like a 52% winner there, and that was cash settled. It actually was up. It was up like 75% at one point. I was watching. I mean, there was $150 out of the max 212. I was watching. I was like, well, the 72, the 7720 gamma level looks pretty good. If we settle somewhat close to that, I mean, this is going to be most of that profit. So I held on to that. It cash settled for like $100. It was $96 winner per contract. But the other butterflies that if you saw me take those bonus trades in the masterclass window, I had one up here to 7750. I had one at 7690. Okay. And then I had one around the 7720 zone. So I had 3 butterfly trades. Now, the net result to take 3 butterfly trades, and it's like $1,200 a max risk. I only lost $160. But here's why. And the reason I said it was so close to being good for the day is because if we were at 7715 or 7720, I would have been winning. This would have been 20, would have been ideal. That would have been up around $1,400. So even at 77.15, that would have been a $900 winner. Okay. That would have put me up like $700 for the day. With all the other risk, I'd be up $700 for the day. And it's like I was, 7 to 8 points off. If we came down to 7,700 or down to 76.95, that would have been worth $1,000. That would have been worth $1,500. And my $1.63, I'd be up, $800 here and about $1,300 here. So, I mean, again, I didn't win. I lost $160, but I was pretty darn close to having a really good day. And that's the breaks. Like if I'm trying to hold a close or hold a trade into the close, it's about precision. And that 7720 level looked good until the final 15 minutes. And then it slipped down about 10 to 12 points. To the downside, I mean, 7,700, 7,690 would have been fantastic levels, but price didn't get down there. So it is what it is. But for me to walk away with, I mean, having $1,200 risk and I'm down $160 doesn't feel like a big loss. It's a fraction. So it's okay. We move on. That's what I'm talking about. Those are the bonus trades. So if you just took my double up trade yesterday from XSP, that was a winning trade. That was it. If you just took the morning trade with me, you had a winner of like 52% return on risk. So, I mean, if you traded with me in the bonus session, I threw in 3 more butterflies, and that was my net loss. Why did you not care about the SPY? Because the SPY doesn't settle at 4 p.m. The SPY cash settles, or the SPY doesn't cash settle at stock settles, and I don't want the assignment risk. So I trade the SPX because it's pure index, and it settles right at 4 p.m., and those are the numbers I pin. It's also a better tax break. It doesn't matter, PO. I mean, the SPY is never going to be the same as SPX and XSP. You have too many ownership sides of calls and puts. The SPY being right yesterday, I don't care. I trade SPX, and it's the most reliable option speculation that I have. SPY has ownership in it. So there's lots of selling calls and selling puts because of the equity side and the ownership side of SPY. So it's not one for one. So the SPY having the better pin price yesterday, good for the SPY, but it doesn't help me trade. So it's just like, yeah, if you make a habit of watching all three of them, if you watch SPX, XSP, SPY, you're going to see that SPX is probably more reliable than all of them. I mean, SPX is going to be more expensive than XSP, but it's also more liquid and bigger profit potential. And I even had this conversation with Kane since he runs a butterfly service called Bullseye Trading. He does it at 3 p.m. I mean, his data shows that the SPX is like 20% more reliable on those pin prices. Yeah, Bud, you're not. I mean, you didn't miss out, dude. You didn't lose anything, right? I took the loss, not you. So, like I said, today's masterclass at 11:15. We'll just break down the strategy. I'm not going to make it as like trade heavy. So let's just focus on the education. Let's get a bunch of new traders in. We probably had a bunch of new traders in, and it was a little overwhelming. And like I said, I admit that. So let's go into like the bite sized pieces. Make it where it's like you start thinking about the markets and placing trades and butterfly spreads for your double up strategy. And as I say, like you skate where the puck is going, and that's what we want to see. Okay. We'll take a look at that one today, Steve. Yep, the back ratio spread. So that should be looking pretty good. Let's see what that should be looking pretty good for today. If in fact, I think if we have some profit showing on that back ratio spread right here. So I mean, even right now, if it's positive, I will check and see exactly what that break even is. Let me see if I save that in options Omega. In option Omega, did I save that back ratio spread? I did. And I did the call, and I freaking had a feeling I did the call ratio spread instead of the put back ratio spread. So obviously, in hindsight, it'd be nice to have the tail credit be here, and then the unlimited profit potential be here, because that'd be much more profitable this morning with the market down about 40 or 50 points. But that's okay. If it's showing profit, I might just take it, not worry about it going into tomorrow. That eliminates the dead zone entirely. Grab $50 or so. Because what happens if price comes back up today is what? If price comes back up today, I'm going to be sitting in the dead zone, and the dead zone is going to sag more today and certainly more tomorrow. So if we're not breaking 770, which if we are below 770 by tomorrow, guess what? We have about $200 of profit, right? So that's not bad if we are below 7,700. But if for some reason we're back up to 7,700, well, that's right here. So take this into expiration. If we're at 7,700, we're break even. If we're above 7,700, we're losing. If we're between 77, let's say 7,710 and 7,800, that's a big, fat, ugly dead zone that I don't want to take on that full risk. So if we can see some profit now, again, if this is accurate, if I can close this thing, let me see if I can close this out with global hours here. Can I close with global hours right now? So we got in for $1.88. Let me see if I can close this thing for $1.25. $1.30. I'll try to just take a quick profit on it if I can. So can I get $50 out of this thing at least? All right. So I just closed out that back ratio spread for 55 cents. And if I want to sit on it today, I could hope, but it's like we're on the wrong side of the trade. In my opinion, this trade needed the follow through yesterday. We had zero follow through from that treasury bump yesterday. Did we not? The market went up in the morning, faded, up again, faded, and then faded the entire move for the whole day. Today we are opening lower. So this call this call ratio back spread is the wrong direction. If I want to have a chance to hang on to this trade, I want it to look like this. That way, if we go up, we have profit because it's the fixed credit side, but we have the unlimited profit potential if price is going to fall deeper. So, like that treasury move yesterday did not provide the upside follow through. I think that the intention was that it was tended for. I mean, the yields have pretty much given back what they sold off yesterday. And anyway, so I'd rather just take the profit now. All right, so I'm put this in Telegram. I think I got like a bonus image here. See if I can find bonus. Nope, just gonna have to find the old thumbnail. Closing bell. There we go. Bonus trades, XSP, call ratio back spread. Entry was $1.88 credit. Close $1.33 debit. Keeping 55 cents per contract. Price opens lower Thursday, but the dead zone is 7,700 to 7,800. And this trade is likely better served as a put ratio back spread for more downside gains. But in this example, the downside flush is fixed at about 100 and I guess it's like $200 profit. The dead zone is too large, and if price is back above 7,700 or 770 XSP, then we sit in the weak spot for this trade. Taking the profits and moving on. Fair? All right. So, and we'll see, but it's like if price falls, then sure, I forfeit a little bit of profit. But my concern is that if this, for whatever reason, this market's like, you know what, we're pulling right back to 7,700. Okay. I mean, I think it's vulnerable below 7,700. Let's zoom out here to like a 30-minute chart. So this low is right around 7,700, right? So we test it. We get back above it. We break it. I mean, I'd like to see if the market, and again, we might see crap like this. This structure could be setting up a bit of a topping pattern, and we might come back and retest the same high again before we fall. There could be all sorts of noise here. So by tomorrow, if we're back above 7,700, that's all dead zone for that ratio spread or that back spread. So unless we are going to have this like perfect little like kiss at 77 and then fall, and the downside with that trade is it's capped. So I make $200, hooray. But if it gets into the dead zone, there's a $400 risk right there. No thanks. So I'll just take the profit. We'll move on. Okay. Am I still like bearish on this market overall? Yeah. I mean, right now with that inefficiency and more inefficiency, I mean, this could be a noisy day. We can come back to 77 and then kiss off that. We can come back up to this level here. And after OPEX start to get more direction, I don't know. Today is just a day. Okay. So let's see what we get. So right now, we'll open up here in about 3 minutes. I'm looking at, this could be an interesting day to play one of the iron butterflies for XSP. So if I sell here, build out one of those low risk trades to try to capture as much of this expected move as I can. I mean, price for the most part, I mean, we might have a very contained price again. I'm going to play it a little bit larger and see if we have a move maybe down to like 75.85 or move up to like 77.50. So from here, if we find, let's say we find like 77.50, well, I'll see if that gets contained. So if we're at 767, let me do the math here. If we're at 767 and we go up to 77, I might as well go 777. So we go 10 wide. That takes me down to 757. That's perfect. I'm going to go 10 wide. If we can get $8 or better credit, that would be up to about 774. No, 775. Yeah, I like that. Give me 8. I'll do that. Okay, so double ups. I'm going to throw in a trade right now. I know we have a few minutes for the open. We can put this in at opening bell. We can put this in global hours. It's going to be essentially the same thing. But I'm going to do a 767 for today's expiration. So it's the 20th, not the 21st. So 767. I'm going to go 10 wide and 10 wide. So that's 10 wide. Now the broker says you can have $3 for that trade. I'm not interested in $3. I say give me $8. Okay, I'm going to risk 2. I'm going to risk 2 to make 8. Okay. And you can put this in. I mean, the market's going to open in 1 minute, so you can put it in regular hours. You can take the global hours, but I'm putting this in for double ups. This one may not fill, but if we start testing the outsides of our expected moves on the day, like the highs and lows I have set in some of those call walls and put walls, this one could be a really good trade for a 4-to-1 opportunity. Okay, so double ups. I'm doing a pending order. XSP 820 expiration. 767, 777, 767, 757. $8 credit, $2 max risk, pending good 4-day. All right. Also, because we've had a little bit of a flush lower in the gap side, I want to see where the flashpoint income pain point is. Because if our pain point is very close to where the market was already at today, I may only go to the tsunami trade and not trade both flashpoint and tsunami. Okay, market's already off the lows by about 20 points. We just had a engineered option trade fill as well. So there's another one for engineered options. This is going to be one of our defense trades. So break even level, defense kicking in. We'll give this a run. What do I need by pending order? It means that I want price to come to me. I'm not going to accept the trade that it's offering right now. I want price to come to me and fill me at what I want. So it's a pending order, like a limit order. That makes sense? Yep. So I'm in the 770, 769. I'm also in the 7. Yeah, that's the one that just filled. So 779, 778 filled. 770, 769 filled. And we have other defense. We have 2 more defense trades stacked in as well. Okay. All right, we're at 7684. Let's see where things move around today. Initially, I am thinking of some butterfly spreads, maybe around like HVL today. If we come back and revisit the lows, that's 77 or 7650 or so. Look, just from a technical side, I mean, this is full price. So this is the 24/7 or the 24-hour CFD. If we hit this support and we come back and test but kiss and reject 7,700, I mean, I think there's still more downside. Does that all happen today? I don't know. From open to close, I mean, we might pull all the way back up here and test this high and then fade after OPEX. I could see that happening. There was an interesting session yesterday. I'm seeing that Jem Carzan is on a lot more with Tasty Live in the network. He's on there with Jamal quite a bit. And this guy has like structured products and it's Kai volatility and blah 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 or whatever it is. But he's always talking about some pretty ugly things. He's talking about basically like a 10% correction coming after OPEX going into the midterm elections. I mean, I took some interesting screenshots yesterday, and basically we've had like this insane vol suppression where like the 3 month vol as in like volatility. So 3 month vol and the 30-day it's like the 1 month to 3 month and 12 month volatility are all suppressed. And it's looking like technically they're about to, expand and break loose. So again, I proceed into these next like 30 to 45 days with a lot of caution. Um, I had a new account that landed in my advisor account this week, and I haven't deployed any capital outside of a hedge. And the reason why is like I just think if we're gonna have a flush, I'd rather get a better dip. I'd rather have better premiums, so a slightly higher VIX reading, and that would make for to me a slightly better trade. So, yep, I'm using 44.28 on the expected move. It is probably less than that now. I pulled this from the Tanuki Trade Smart Range. Oh shoot, that changed a lot. So now we have the Tanuki Trade Smart Range up to 52 points. Interesting. Let's I hate making the changes intraday like that because look, if you take your broker platform, what's our broker platform for SPX today? SPX 25. 25. Like it's smaller. It was only like 30 to start the day. So it's been reduced. The smart range here is up to 52, but your pre-market prep, okay, your opening bell is now 38.74. This is probably pretty accurate with what we're seeing right now. And then you have your end of day, which is 31.4, pre-market 25.44. So I think, about 38 to 40 is probably adequate. I mean, would I be like shocked to see it move? I mean, 52 just seems like if it's gap adjusted, this is going to be. I mean, that's 30 to 40 points. I kind of like the reading here around. I mean, all this does, if we can get the premium for this to go 52.13, let me take a look at this. So I'll come back to 44.28 in a moment, but I'm going to go. We'll go Thursday. So I'm using 44.28, which I pulled directly from the Smart Range feature on Tanuki Trade, and now it's showing 52.13. Okay. So what I want to look at is with the box measurement at 44.28, that's telling me to sell the 77.50. If I'm looking at an iron condor. Now, I don't mind taking this trade for daily profit play, but if I'm going to take this trade, I better be playing some defense. And also, I mean, we opened up at 76.90. Do you want to know where we were this morning? This morning's lows were 76.60. So I don't really love the bottom here, like 76.46. If I play this level, if I play this expected move here, if I play this expected move right here, I want as much premium as I can get. Okay. So let's see what it looks like first. So this is saying around 7646 and 7752. So 7646. So if I do, let's say I go just right outside the box, I'll go 45 by 30. That's 15 wide. And then a 7750, 50 what? 52? 52. So I'll do the 55. 55 by 70. So on a 15 wide, I can get $1.40 right now. Now, do I love that risk profile? Not necessarily. If we come back and revisit the lows today, which overnight lows were 7660, I mean, this is a 12 delta on the put side versus a 4 delta on the call side. again, because it's gap adjusted. Now, if this trade on 15 wide was offering like 750, or better yet, like let's say $10, I wouldn't mind taking a lower risk trade. So I'm going to do this. I'm going to put a pending order in. It may not fill, but I'm only going to risk 250 on the day for daily profit play to make 1250. So if the market respects the overall range and the high low of the day that I'm forecasting, it can test it. I just don't want to see a lot of risk on the upside or downside. Does that make sense? So this is going to be my daily profit play pending order. It's going to be a 250 risk to make 1250. So I'm just not fudging around with high risk on what I think is going to be higher volatility ahead. Yeah, Steve. So you change the box to 52. So if you change the box to 52, okay, you change the box to 52, then I'll do that right here. So I'll go back to this in a second. I'll go 52.13. Okay, I still want the premium still matters to me. So now you've got the high at 60, 77.60, and the low around 76.38. Okay, the same rules apply. If it's at 38, then I'd either do like the 30 by 20 or 30 by 15. And 60, I would just do like the 60 by, I guess 65 by 80. 15 wide gives me 80 cents. If you want a high probability trade, that's probably high probability. That's a 99.5% chance of profit on this trade with current plus or minus. But am I happy with 75 to 80 cents risking 14.20? Not really. But if this trade gave me $1.50 and I wanted that high probability profit, give me $1.50, risking 13.50. There's my 11.1% return on the day, right? 150 out of 13.50. There's my 11% return on the day, very mechanical, and a low delta. That's a 9 delta put, and that's a 2 delta call. Probability profit's very high. Is it guaranteed? No. But that's a pretty conservative trade. There's your 52 moving or your 52 box, which is well above what the broker showed this morning. The broker showed 30. You're trading a 52 point box. Like that should help give you some buffer. John on the XSP. Yeah, it technically is an iron butterfly, yes. So if you want to enter it as if you enter it in as a fly like default strategy wise, it's going to put all of the strikes on one side. Can you default it as an iron fly? Let me see if I can go to XSP and show that. I just keep telling traders, like, just build the trade, man. Like, I know some people love to I'm going to pick the strategy here. Fine. I'll do a butterfly. Okay. This is a butterfly. If I do a short butterfly call, see how it puts it all on one side? The iron butterfly it's almost going to be easier to build this out as an iron condor. I'll do a short iron condor and build it out. We did this 767. So I sell the 767, 767, and then I go 10 wide. So the iron butterfly is using calls and puts. So if you build it as a butterfly, it's going to put them all on one side, like only calls or only puts. So I think an iron condor is the easier way to start it if you want to default that. Look, I hate using this. I don't even care about these strategies. So what do? I just build it from scratch. I know what an iron butterfly is. I'm going to sell this. I'm going to sell this. I'm going to buy this. I'm going to buy this. If I follow my alert in double ups, you just click on everything in the option chain. So double ups. I just find my XSP, find my expiration, and build out the trade. Right? That's it. So I just click on these, sell this, buy this, sell this, buy this, put in the credit pending order. There. So click. I'm clicking on the bid prices to sell them. I'm clicking on the ask prices to buy them. And now the iron butterfly is built. And then I just put in the $8 credit, which allows me to put in the pending order. If I get $8 credit, I'm risking 2 to make 8. It's a lot easier to build it custom than it is to, default to a strategy that's going to make you drag your strikes where you want them anyway, in my opinion. Okay. And Thinkorswim, it's actually not that hard. If you're using Thinkorswim desktop, just hold control to add the legs. If you click on a bid price to sell it, hold control, then you can buy, hold control. You can hold control, and that will build the ticket out for you in one time at one trade. That makes sense? If you use the Thinkorswim web, you can just click on them similar to what you have in Tasty Trade. Yep, control key is your shortcut to build out those trades. Exactly. I may have struggled with a Flashpoint with the the first trigger sequence that all you helped me with, but yeah, the control building out trades and finding the tickets in your order chain that's easy peasy. All right. So speaking of Flashpoint, let's see if we have the alerts out. I want to see what those pain points are today. Pain points. No, that's what's on my brain. So Flashpoint. So today, 7627, 7589. I mean, okay. I mean, that still means that price has to push another 30 to 40 points lower, even overnight, which I think is fair. So I'm going to go SPX. Let's get some trades in for Flashpoint. So Flashpoint is 2 trading days. So I'm going to go out to Monday, the 24th. That should be correct in the alert. Yes. So Flashpoint is out to the 24th. So I'm going to follow the alert, go out to the 24th. SPX shows a 7655. For a 250 debit. It's only good for the day, so it doesn't fill today. There's no trade. So good for the day. So if this happens, then give me that take profit. Okay, I'm going to bump this up to 40%. So if this happens for the day, then focus on the take profit. And that one's good. I like to remove the stop loss. So it's only if the trade fills, then focus on the take profit. I'll manage the stop loss with time. And then the tsunami level is a pain point of 7589. And that filled me right at 7,600. That's a 275 debit. Good for the day. And 325. I'll go for 30% there. Okay. So 275 debit. If that fills, then focus on the take profit. Make sure it's good for the day. Yep. And yep. Good. Okay. Daily profit play trade. It's oh shoot. Yep, you're right. SPX pending. That is the 1250. Yep. Pending order. This is a low risk DPP. Thank you for reminding me. 820 expiration. Seven, 630. Which is higher than the TOS and Tasty Trade plus minus levels. This is asking for a large credit, low risk setup if price tests the upper or lower levels. Okay, so it's in for daily profit play. Right now, live price, we're back to 7.6. This is kind of that like kiss point that I thought. Um, let's see what we have. So if we're, I mean, what's really misleading today is it looks like opening bells like, oh, we just opened up here at like 90. It's like the market was down at 76.60 today. So we actually had a pretty convincing rally, like back up to kind of fight this move. This is, I mean, this is a better reflection of where we were at for this morning. It's a lot of volatility. So is this a, high to low, pull back, lower high to lower low, pull back, lower high to lower low? Is this coming today? Is this coming tomorrow? Is this coming next week? Like I said, we could have this market still push up into this area before there's a bigger flush. Like that's a structure break, that's a flat pattern, and this market could still sell off for symmetry. So I'll continue to map this out depending on what we do technically speaking. But to have this market break this level, to me, this looks like a bit of a topping pattern. And at best, this would be like a flat, and the market comes right back down to symmetry. So I think we are still most likely postured to go lower. I just don't know when this level gets hit. It could be one nasty sell off day. It could take all week to get there. Who knows? So I just think that right now, if price, here's my line in the sand. If price is going to be below 77.50, the bears are still in control, in my opinion. So we just prep for the day. It's a clean slate. Read it to the best of our ability, manage risk, and do what we can. Okay. All right. So I'm seeing all the comments here on YouTube. Yeah. So daily profit play is in pending order. Double ups is in pending order. We took profit on that bonus trade for the call, but it's the call back ratio spread. Stupid name, but you saw the structure here. And right now, I'm curious. I'm just curious where it's closing. So XSP closed it for. All right, well, good. I mean, we got out of there with a little bit of profit, and it's back up to $1.70 right now. So grab 50, $55 a contract versus 15. That feels better. And there's still, like I said, a wide dead zone. Like basically anything above 7,700, this trade sucks because that dead zone is not going to be covered in one day. There's no way we're going to 7,800 by tomorrow. Virtually no way. That'd be a crazy squeeze. So anyway, like I said, to me, this move is. I mean, there was our dump from Monday to Tuesday. Price was dead on Tuesday the entire day. Wednesday got a little bit more exciting, but it basically finished. This is why I was trying to pin like it did yesterday. I thought, well, because of the noise yesterday, there's a chance we might pin right at where we opened, which is 77.16. That's why I chose the 20 pin. Didn't work. The 90 because of this close didn't work. It was right in between. So that was unfortunate yesterday. So for today, look, I would like to see the market try to get back down to like 76.60 today. And to me, again, it's like this spells maybe more downside. Below 7,700, this market does not look postured to go up. So if we stay below 77.50, I think this market is going to lean bearish. Okay. So, I mean, you can already see today is like it's a lot of noise today. But if we cap it at 7,700, if we cap it here, come back down and retest the lows, I mean, the market may be this today, and that's still a range bound day. But if we break and go up, HVL's at 20. If we break and go lower, I mean, there's some open space down to like 76 if we have a nasty sell off day. Yeah, but it was right at I mean, yeah, I don't know what it was, but you had a really good flush at 7 a.m. Here's futures. I said this morning in my 8 o'clock session. I was like, wouldn't be surprised to see us come back and hit the daily VWAP. So short-term scalp. And obviously, if you were, I mean, again, I didn't trade this morning, but it's like right at daily VWAP resistance. Nice little flush. Came back to retest VWAP. Nice little flush. Came back to retest VWAP. Like either way, if this is all you focus on, it's like, yeah, there was a couple precision trades today. You're going to blame that sell off on Walmart earnings? Walmart moved the entire market today. I think it's that the fact that Walmart is 50 times earnings that it maybe just needs a bit of a correction. So, I mean, Walmart, look, I'd be happy to scoop up some Walmart at 90 bucks. Let's just take a fib here from this low to high and see if Walmart settles in around equilibrium. If we hit the 50% to 61%, that to me is a pretty good spot to get in some Walmart. I mean, logistically, Walmart's pretty solid. They have tons of buying power. Even if people are struggling with the pocketbooks, Walmart's not a bad alternative for shopping. Everyone hates on it, but in a pinch, you're going to shop at Walmart. So anyway, I just wasn't a fan of buying it at 130 bucks. So I think I have ratio spreads out for us in Project Options Edge. Let's have a look at that real quick. So Walmart, I have the 85 by 80. So we still have another 55% of profit to go. And I'd also be happy to own the shares at like 73 bucks. So if I own shares of Walmart down here at $73, that would be a pretty healthy correction. There's a 46% correction on Walmart. So I don't know if we'll get that necessarily. Besant's on at 11 a.m. to discuss QE intervention. Yeah, I don't really know if this is QE, to be honest. It's liquidity. I don't know if I think it's going to be called QE, but I don't think it's actually that. But this is government and Treasury and Fed all in cahoots trying to work this stuff out. So, I mean, look, even today, it's like this is another like challenging day. It's like what is this? We had a 0.4 to 0.5% gap lower, and yet the market's like, that's it. All the damage is done. We're gonna just fight back all day. I will say this: I don't know why this day felt so terribly difficult. Just because the premiums were so crappy. That's why. So I mean, if you're going to the expected move box, you don't get any premium at these highs and lows because you're so far out of the money. And if price just does this in realized vol, that is such a misleading day. Market's down, VIX is up, you get no volatility to still sell premium. Freaking sucks, man. And unless we have just a massive gamma level, which we don't. I mean, look at all this potential noise. 7,700 is a bit of a front runner, but like there's a lot of potential slides here. Here's what I'm hoping for. Okay. We've had efficiency. We've had low vol, low realized vol. I'd like to see if today or tomorrow we can actually get some direction. So if the market wants to come back down to revisit 76.60, that was the overnight low that nobody really sees unless you're looking at the CFD price. So if you see this overnight, you're like, oh yeah, the market was down to 76.60. So if we come back to that level and we break that level, well, things can get really interesting. But if we come down to that level and bounce again, and all we're going to do is stay between 76.60 and 7,700 today, well, there's your 30 to 40 point move. There's your 30 to 40 point range. And there's your price action for the day. Are we still in the XSP? Walter, that wasn't my trade. I was in a 769, 775. You're talking about that ratio spread? That was that back ratio spread? Yeah, I closed it out this morning. That was one of the first things we talked about. Let me go here. So that callback ratio spread, well, technically it's call ratio back spread. Stupid name. I got out of it. If you didn't close it out with me, it's still profitable, but it's only like 15 cents profitable instead of 50 cents. I got out for 55 cents. And again, here's my explanation. I'm repeating this, but I look at this as the market is certainly more vulnerable to the downside than it is the upside because we had no follow through on the treasury bump yesterday. That what I really wish I had was the opposite trade. So I wish I had the dead zone, the credit here, and the unlimited profit potential out here. I'd be curious what that trade would look like this morning. So, for example, if I flip this to sell the 775 put and I buy the 769 put, I don't know if that dead zone's in the same spot or not. Maybe it is, maybe it isn't. But we'll see. So anyway, I just took the profit because if this trade is going to hang out around 7,700 or get up between 7,700 and 7,800, that is all dead zone tomorrow that I don't want. So I'm going to reduce that dead zone, take the profit, and we'll move on. XSP is the only one, John. Okay. So who thinks that Walmart's the reason the market's down today at 7 a.m.? I don't. I mean, Walmart's maybe a contributor to it, but the reality is, look, the market is vulnerable below 7,700, period. This market needs a backfill of this ridiculous run that we saw early August, period. Okay. A pullback to the 50-day moving average is not out of the ordinary. A pullback into these ridiculous inefficiency candles is not out of the ordinary. Even the treasury stuff yesterday, the timing of it, really interesting. But it's like, what's going to be really sad is if we have that type of liquidity and the market's not even excited about it. That's not a good sign. And if yields don't cooperate and go down, if we don't have the 10, 20, 30-year yields going down, then what the hell was the point? So I think the bond market is like, funny, hold my beer. And the yields continue to stay really, really persistently bullish. Okay. So that's it. I mean, I think that we are now accelerating our path towards, I've talked about these before, but paradigm B is cut, paradigm C is grow, and paradigm D is print. Okay. What comes after that? Paradigm E is the fourth turning. And that's capital or war. Like capital wars, that's like the Ray Dalio stuff. That's the changing world orders. That's the fourth turning. And that's what all your smart bears are talking about. They're talking about this, but their timing could be years off. Like Ray Dalio's been on a freaking book tour for years now. He's still talking about it. Doesn't mean he's wrong. But we all know how this market can climb the wall of worry, and this market can be irrational very, very long. So it happened people knew about the mortgage crisis and the banks in 2006. Started shorting the market. They were wrong, right? Because they couldn't hang on to it for 2 years. People knew about the dot-com bubble. When you put .com at the end of your name and you're up hundreds of percent, the Nasdaq's up 100%. People knew it was a bubble. They were wrong, timing-wise. So, my concern yesterday is that we just jumped from what looked like an encouraging grow our way through this deficit spending to now maybe closer and closer to print. And that to me is like, I don't know how much longer the game can keep happening if we're now just printing. Now, what I think this is good for right now is it's great for gold, possibly great for Bitcoin. Okay. It's great for scarcity. It's great for physical assets. It might be great for commodities. So this can still last a while because there's liquidity in the system with this print. China's doing it. US is doing it. It's most of the global money supply is coming from US and China. But if we accelerated this, ultimately we do get here and there's your secular bear market sooner or later. I'd be shocked that if we survive this bull market by like 2028, 2029. Um, man, I think by 2028 to 2030, we deal with a pretty nasty bear market. It doesn't. I mean, you can see it. Can you read it? Can you read it? Cut, grow, print, fourth turning. So I just think that we accelerated into this like grow has been like, well, we did have some growth. All the earnings are pretty solid, but if it's not enough, the bond market's really, really a thorn in our side right now. So it's going to be that manipulation to add liquidity. Now, granted, the Treasury cannot print money, okay, but it is a. I saw this write up on it yesterday. It's essentially like a fancy operation twist. It's a liquidity measure. It's not quantitative easing. It's not printing money. This is an action by the Treasury, not the Fed. So it's not treated the same way. Okay. If the Fed were to come out and say we're going to add liquidity on top of the Treasury, it's like holy crap, dude. Um, there goes the dollar, and my God, gold could be like one of the greatest trades, right? But anyway, we're not there yet. So let's see what we get. So far, the market is kissing off that 7,700 and possibly revisiting lows today around 76.60. I'd like to see the market go a little bit lower if possible. Let me see if there's a better gamma reading. So, I mean, 76.50. Is it a low enough butterfly? Is it low cost enough? Let me see. I mean, it's right at the expected move, so it's probably not super low cost. I mean, it's not bad. It's like about a $250 to $275 risk, but it's like, is that the best gamma level? I mean, it's revisiting the lows of the day. That doesn't mean anything though. I mean, there's a lot down here, but it's not really climbing up to like the front runner for absolute gex. Part of me wants like the flush. I'd like to see the bigger flush today. I don't think we're gonna get it though. If we if we crack fresh lows, there's a pretty open space just to bleed lower. I don't know. I'm just not gonna throw a bunch of trades out yet. I think we just kind of ride this out, saying I'm doing low risk only. And if we get filled with low risk trades, I'll take them all day. I'll take low risk trades all day long. Okay. If we get filled and get burned for a tiny loss on daily profit play today, or get burned on a double up trade and it's tiny loss, like it's fine. It's a paper cut. But I don't have enough to say like these are my key levels for the day. There's too wide of an area. There's a put wall way down here. There's an HVL right here. We're right in the middle of all this stuff. We know there's resistance at 77. Do we hit the lows today at 60 and break lower? Do we break lower? If so, like 7,600, let's go. But we could just have like another crazy contained day. So not forcing trades. I'm hoping there's more volatility today. It's the day before OPEX. Usually the shenanigans kind of happen like the days before OPEX. So with yesterday's little treasury stint and today going into OPEX, we'll see what happens. All right, what else? Uh, do you think the markets could be digesting yesterday's treasury yields reversal? I mean, they are. I mean, the markets have to digest everything. So obviously, yes. So here, I mean, we're right back where we started. The 10-year, it's like nothing. You would never think that yesterday was a huge liquidity event, right? Because we're right back where it looks no different than what we've seen for the last 2 months. July to August has just been sticky, higher, one day down, one day up. It's right back where we started. The 20-year, same thing, down, back up. 30-year, down, back up. Now, I could be wrong. I said yesterday, like one day doesn't make a trend. So this down day, this up day, like this might still fade to the downside. I doubt it. I think it's still going to be stubborn. I think it's going to force the Fed's hands. I think this is the biggest risk we have in equities right now is the bond yields and the higher cost capital. That to me is the bigger risk. Okay. The VIX is likely going to head higher. So the VIX is at 16 right now. We're up 7.5%. That's nothing. A VIX at 16 means like a 1% swing. Now, what would be more nerve wracking is the VIX climbing today from like a 15 reading up to like an 18 or 19. Like a 1 day move like we've seen here, that's a scary VIX because it's hard to call a bottom. But we have not seen any real ventilation and volatility for months. Like, think about this. The market has been contained. Yes, we had a June correction of 5%. We had another correction of 3%. We had another correction of 2%. That is ridiculously low, right? Meanwhile, we've made all-time highs. Now, we made all-time highs in the S&P and the Dow and the Russell, but not the Nasdaq. So we will see. All right. So, let's see if the VIX continues to climb higher today. Let's see where price is at. Lows on the day. I'll set a chart alarm here at the low around 60. I'll just move this up. There. And let's see if we get any follow through. So here's where I'm tempted to throw a couple butterfly spreads. I know it's not perfect, but I'm tempted to throw a butterfly around like 77.10 to try to catch as much of this as I can. So for like 7,700, 77.10, 77.20, I'd like to get a butterfly that could pay us up here and down here towards the lows around like 45 or 50. If it breaks and goes lower, it's got to be cheaper. It's got to be a cheap butterfly. But if I pinned around 45 or 40 and try to capture, 50 down to like 40 or 30, let me see what those look like. And I can kind of position for that because we're out of the money enough. Like this is, 25 to 30 points higher. Let me see what this looks like. So this one, let's go like 45. Like that's not terrible, right? For $2, I can get, if we revisit the lows, like that may pay like up to $1,000. It's not too bad. I think I'm going to take this trade, 76.45. Now, it may not be great. So you can get this for like $2 or less. All right, just got in for a butterfly at $1.95. I'm going to take these trades for double ups. You don't have to take these trades. If you are brand new to me as a double up trader, you want to get into the masterclass today at 11:15. You don't have to take these trades. Just be a spectator, learn the strategy, learn the core concepts before you start placing all these trades. But I'm going to take this. This is 20. Did I do a broken wing on accident? Shit, I did the math wrong. Hang on. Crap. I meant to do this one here. Shit. Well, I made it a broken wing now. That's stupid. I'm just going to close this down. So I did it incorrectly. Fudge. So here, 25, 7625, 7645, 7670. All right. So let's group this. I'll call that the wrong fly because it's a broken wing. But if I'm up $30, I'm going to take it. So $1.95. Let's grab $1.80 out of this if I can. Actually, that's a credit. I don't think I'm going to get any money on this trade. Let's find out. $1.90 debit. It's going to make me lose a couple of bucks. Let's grab $25 out of that. What a happy little mistake. As Bob Ross said, happy little accident. I'll take that. All right, now I can rebuild it. So I like the 45, 70, 20. That's 25 wide. Now, do I want to pay $300 for that trade? Well, the good and the bad is this. Um, if we are going to come back down to the lows today around 76.60, possibly get a little bit lower into this 50 gamma, which is a put wall, by the way. If we come down into this 50 and 45 area, that will pay pretty well. Okay. Does it mean it's going to be the pin price today? Not necessarily. So, what I'm going to look for is something in this as a butterfly spread trap. So, I can get into here for about $3. See if I can get out of here for like $3. Three not filling, 305. Okay, 305. Now that 305 can pay up to 21.95. 21.95 out of 305. That's a 7-to-1 setup. So double ups is coming your way. Again, if you are a new trader, you don't have to jump in, trial by fire, stuff like that. Just sit through the masterclass with me, ask a bunch of questions, start wrapping your head around this butterfly stuff. New order. 8:20 expiration. 7670. And I'm using calls, even though I want price to go lower, it treats it the same way. 7645 and 7620. So 305 debit. That's my max risk. And then the other side would be if I land something around like the 7710 to 7715 zone, and I may not, like, where do we open up today? We opened up today at 89 or 90. Honestly, right now, I feel like let's just let that trade marinate for a second, because if I put another trade in up here at 15 or 20, I mean, we might get there, but I think this market is vulnerable to the downside. I'll put it in if it's really cheap. If I do a 15, let's see what 20 wide looks like here. I mean, that's another $2. I mean, that's another $3, I think. It's not terribly expensive, but the market's going to have to do some severe comeback trading back to like 77.09. Now, if I pin it here at 15, I mean, this trade does do pretty well. I just have to be willing to take on that risk of another like $3, which I don't love. So maybe 20 by 40 by zeros. Like, that's cheaper. Let me see if that's any better. So 20 by 40 by the zeros. I mean, that's not awful if you get this trade for like 230 or 240 max risk. And the weakness is if price is, obviously not down to 76.50 or not above 7,700, then there's no profit. But I don't think this is a terrible trade. Let's see. All right. If it's cheap enough to get $2 out of this, I'll play around with the numbers. 205 or 210. All right. Got another one in for 205. SPX, 820 expiration, 7,700 put, 7720 put, 7740 put for a 205 debit max risk. All right. So I got two butterflies in. One is 25 wide, one is 20 wide. And I mean, those aren't awful. So, I mean, you can play around with the debits, try to get filled at the same price, maybe a plus or minus 5, 10, 15 cents maximum. Again, look at the profit side. The 305 debit is up to a 25 wide butterfly. So that's a $2,200 winner. Okay. The 205, that's up to almost an $1,800 winner. So let's see how the day plays out. But I mean, another 10, 20 cents on top of that is not a bad fill. If one is cheaper than the other, obviously not a bad fill. Is there a weakness in here? Yes. If price is going to hang out literally at 76.80 or 76.90, that doesn't help me at all. And I'm wasting some money. Okay, but I'll see. I'm looking to see if price will get sticky to the downside, which could be good. You can take butterflies, either calls or puts. They trade the same way. If I put in a butterfly spread, okay, so if price is here and I do this with all calls, it doesn't matter. If this is live price and I put call spreads, it's a call butterfly spread down here. As long as price goes down into this area, all of my butterfly values will go up. So you can trade butterfly spreads with calls or puts. They behave the same way. If they're in the profit trap, you get paid. Doesn't matter. Okay, then play with the strikes. Move the strikes down. If you want to look at the look at the gamma. Okay, we have a put wall at 76.50. We have lows at 60. We have, I mean, try the 45, try the 40. This is the stuff I want to talk about in the masterclass. If I start getting your brain wrapped around this butterfly stuff, like you'll learn very quickly, like just play around with the strikes. Maybe it's 5 points lower. Maybe it's 20 wide versus 25 wide. Like you can finagle it a little bit. So that bottom one for me was 25 wide. Look, I'll do a similar trade, move the strikes in by $5. Now it's only it's like a 75 debit, 260 debit. It's cheaper. You just don't have the same $5. Like I'm getting extra $5 on the wings, but it's still a what 5.5 to 1. Still a 5.5 to 1. Still a good trade. Up to you. That'd be my change if you don't want to go the full. If you don't want to go 25 wide, which right now is trading for like $1 plus more, change it to 20 wide, and now it's for 260. It's still a great trade, almost 6 to 1. It doesn't guarantee it's going to be a winner either. Like there might be the stupid day today. It's like it just holds at 76.80. I hope it doesn't freaking do that. Like I want price to go somewhere outside of this stupid range today. I hope that it does. If it does, we've got some low risk, high reward trades. If it does stay right here all freaking day, then whatever. I'm trying. So I want to get paid in here. I want to get paid in here. In the middle, I don't want to pay that much for this area. I want to see price actually go somewhere else. What do you mean, Jerry? How do you enter the Tasty trade with two different quantities? What do you mean? So a quick way to do it for me, I'll just replicate the trade. Let's go to the put side. So if I want to change this trade, okay, here I'll just build it from scratch. So 7645. If I sell that, buy that, buy that. Everyone agree this is 20 wide? If I click on the leg that I want to add a contract to, so this is a 111, I need the center one to be 2 contracts. So I click on that and I just go down here to quantity and bump it up to 2. So now it's a 1, 2, 1. There's my trade for like 240, 250 debit. Does that make sense? So if I just build it from scratch, that's what I want to pin. There's my 20 wide. And then I click on the one I need to make 2 contracts. So I highlight it right here and click on quantity. Then I've got my actual butterfly debit. Good? Okay. All right. So let's see what happens. I'll set a chart alarm. So that pin is around what? Let's go SPX. That pin is, I've got a pin at 45. So 45, see if that level gets somewhat attractive today. And a pin at 77.20. So, I mean, a couple things, right? If we come down to retest lows or find that put side gamma, it's around 77.50. Okay. If we come back and fill the gap, that's 77.08. If we find these levels here, it's like there might be some gamma like HVL. HVL today, the positive negative gamma pivot point separator, that is 77.20. So I have a pin here. I have a pin here. Do I have any weakness? Yes. If we go nowhere today, then I'm going to lose a small and a small butterfly. They did fill, Mike. Yeah. We saw that fill this morning. Okay. So let's see what the day wants to do. So what would classify as an efficient day today? If price stays above 7641, and stays below, this is up to about 77.55. 77.55. So if the price is inside of that, then we have an efficient day. So let me set a chart alarm here. Let's see if we get back to HVL perhaps. I don't know. I think there's still this like 7,700 is potentially like a retest and rejection. If we reject off this again, and then fall back down, I hope we find a freaking low. If we don't reject off 77, let's just find HVL and see if we get paid. So my goal is to manage the day. If I'm in profit between those two butterflies I took, I'm just going to take profit. I'm looking for like maybe $200-$300 profit if I can get it. Got filled on double ups. Well, your put fly should be cheaper now, right? Again, same thing. It was 20 wide. You can go 15 wide. You can move the strikes up a little bit. So this trade, which is all puts at 77.20. Okay, now it's showing like 320. All right, so what do? Move the strike up to 25. Now let's do this. 05 to 45. If you move the strikes up, so now it's at 25, you're still 20 wide. It's only a 240 to 250 debit now. You're still 20 wide, but I just bumped the strikes up by 5 points. Now that's not as precise as the HVL that I wanted, but that is a more cost-effective trade. It's still a 7-to-1 opportunity. So I'm not begging for precision at 77.25. I'm like, look, I'd be stoked at 77.20 to still make $1,200 on this trade. It covers the risk on the other one, easy. So it's that little adjustment of like, okay, if it's not the price you want, either move the strike by 1 strike out of the money or change the width by 1 strike. So if I go 25 wide, move it to 20 wide. If I go 20 wide, maybe 15 wide, or just change for 1 strike further out. So instead of pinning the 20, look to pin the 25 and still stay 20 wide. Now it's cheaper. Edward says it overlaps the daily profit play, then I'd cancel the daily profit play. Daily profit play with that high credit fill, it's probably not going to fill. Okay. And I don't see the overlap. Correct me if I'm wrong, but I don't see any overlap. See these little working contracts? My daily profit play is here and here. So I don't have any overlap strikes. I'm putting in daily profit play in addition to double ups. I don't have any overlaps. So I don't see an overlap right now. Then 7645. Yeah, my 7645 for double ups was a call fly, not the put. So this is a put spread on daily profit play, but it's a call butterfly on double ups. That's why it doesn't overlap. That's another reason that I love butterflies is because I can put them on calls or puts and sprinkle them in and not overlap my strikes very often. Okay. All right. So we got the market pretty well surrounded. It's not perfect. If we settle around 76.80 to 90 today, that sucks for me. and sucks for you. But I'm hoping, for crying out loud, that we don't have a 10-point range, that it's like, yep, we're going to settle right here. So freaking go somewhere, market. Go somewhere. This is no good. But I don't know what's going to happen. I'm looking at Gamma. 7,700 could still be a level today, maybe. 75 could still be a level today. 60 and 50, this would be great. So, of two of these levels, like right now, this is the most expensive butterfly if I took it there. This is why I did a little bit up here towards the HVL and down here towards the put wall. These are cheaper with higher reward to risk. And just like on Tuesday, which bored me to death, I'm hoping the market's not going to do that all day for a Thursday, the day before OPEX. I'm only in 2 double ups. 2 double ups filled with the other one pending. It was the Iron Butterfly on XSP. If you have Thinkorswim, it will tell you if there's an overlap when you go to the place. Oh, that's good, Tom. That's nice. Okay. So candidates right now, yep, we'll have class at 11:15 for double ups. Look, if I've got anybody, and I know that there's going to be a presentation at 1 o'clock today, if I've got people that are like, look, this double up stuff, listen, every trade I took today in double ups is like a 6-1 or 7-1 or a 12-1 opportunity. Okay. I don't have to be perfect to make a lot of money with those trades. If price is within 5 to 10 points plus or minus of my pin prices, we will do very, very well today. If that is a strategy that you're interested in, where we take trades that we could lose 2 or 3 trades of let's say we take 3 trades on the day. We lose 2 of them, we win 1 of them, we make money on the day. In a 0 DT environment, that forgiveness and that margin for error is incredible, which is why I take them a lot. And so if you are interested, whether you're here watching this thing live or you catch this recording after the fact, what I'm telling you is the combination I play between daily profit play and double ups, it's how I manage my risk, I think, the best. It's how I move the needle pretty consistently week after week. Now, do I want to have huge winners all the time for double ups? Of course. I always want a pin price. I always want to sit on a trade just like, hey, look, we took a $250 risk and we're up $1,000 today. I love those trades. Okay. I love it even more when that trade pays us $1,700 because it can. But when I take a couple of trades, if I'm winning the day, if we're up $200, $300, $400 today, I can make the decision to hold it into the close and try to go for that big fat profit, or I can take the winner and walk away and go trade tomorrow. Okay. So what I'm saying is I'm going to teach a masterclass on this stuff at 11:15 a.m. Eastern time. If anybody wants to get in to that masterclass, contact the team right now, because I'm not going to talk about this until 1 o'clock today for another webinar. And that's going to be get in later. We already recorded the masterclass. So, if you want to jump into the class, it's one of my top classes, one of my favorite strategies. It's the only strategy that I have. Double ups is the only strategy that I have that is by far the largest reward to risk. Okay. Waterfall income, we have profit traps in there that could give us like 250%. Newsbreakers, we usually get at trades that pay us over 100%. Pinch point, we usually get 50% targets hit all the time. Flashpoint, we're going after 30 to 40% winners. Project Options Edge, we sit on swing trades and tie up way more capital to get, $100 to $500, $1,000 in swing trades, but that's way more capital intensive. Daily profit play, we're looking at profits between like 10 to 20% return on risk. Waterfall incomes, mechanical 11 to 25% return on risk or land a profit trap. Newsbreakers over 100%, but I'm only trading earnings season, which is, there's a window for that, and it's pretty much passed by now. We have like a 2 or 3 week window that we trade like actively, and then we shelve it for a little bit. Pinch point, I can get asymmetry on pinch point, and usually it's hitting that 50% take profit because that's the easy mechanical win. That's why the win rate's like 84 or 85%. You can make the trades much bigger, but I don't want to sit in these trades for 60 to 90 days either. It's just a trade hit to take profit. Okay. Recording. Yeah. Yesterday's class, I wouldn't say yesterday's class is my finest masterclass because it was jump right in after a webinar. I was rushed at another session at 12:30. We crammed in like, here's a butterfly spread. Here's 3 trades. It's like that was just it was a lot. And so I think it's better to come to today's class or check out today's recording because it's going to be much slower pace, really break down what a butterfly spread means to me. Why do I place these trades? Why do I position and map out the market with these butterfly spreads? It's always low risk. Yep, that was great. I said that in that masterclass I did last week, right? That combo masterclass, daily profit play and double ups for zero DT trading. They go together like peanut butter and jelly. It's a really good combination to balance out the risk and reward and the probabilities that we trade every single day. Okay. So if you'd like to jump into that class, which will be in about 45 minutes, you can send the team an email and ask to get into double ups for today or call the team directly right now and they will answer and you can get into the class. But and the promo right now, I think we're running like I think it's $9.95. It's one of the lowest prices I've seen the course at. And they're offering this, I think until I hope they're still doing it for tonight. It was like I did the webinar live and it was like, tonight only. I think we'll still honor it at $9.95. So that's for 1 year. I think you can upgrade for the second and third year for a fraction of that. I think lifetime is like $2,100 or $2,200. But again, I'm the trader. Talk to the team on the sales stuff. I just know that when I read through the webinar, I think we have a 1 year special at $9.95. But a lot of members, buy in and then they get lifetime because you know, I mean, again, the whole community here back me up. If you're in double ups and you've taken a 3, 4, 500% winner with me, how good does that feel? There's nothing better. There's nothing better than taking like a $500 trade and turning it into like $2,000 to $3,000 of profit. And you're doing it every single day. You can take that trade every single day. Is it always going to work? No, like today I told you, where's my weakness? If we're going to sit here and glue to 76.80 for the whole effing day, then I'm not going to make any money and I'll lose a few $100 and I'll walk away and I'll be like, yeah, I'm annoyed. But it doesn't mean I didn't try my hardest to find good, clean levels. It's like, look, if we come back to a HVL, if we come down to a put wall, if we come down, it's like if the gamma flows are anywhere, and look, I mean, hell, even 7,700 today could be good. This could be great. Okay, because I mean, if I'm wide enough, it's like I could still get like $500 on that trade, $1,000 on that trade. I might still cover my risk, but I know my weakness is here. So if we're gonna glue to 75 and go next to nowhere, it's like then F it. Like I'm not going to put in a butterfly spread right now that's going to cost me $500 or $600 and then still have that be risky. Because if the market gets any directional move, it's not going to stay here all day. And there's still not enough evidence to suggest that this is the best candidate for a pin price. So right now, 45 million is not really strong. 29 million is not very strong. 27 million is not very strong. Like I want to see as the day unfolds if I've kind of pre-positioned my mapping for the day to see if the market wants to go somewhere. Okay. Yeah, Tom, that's awesome, man. Tom says made $5,000 with double ups in May just trading one contract. I know. I mean, I don't trade these very, very big. It's like I'm 1 or 2 contracts on double ups, and I'm sometimes clearing like, $7,000, $8,000 a month. It's ridiculous. Like nothing is moving the needle as aggressively as double ups is for me. But to take the trade, it's like I'm not stupid with it. It's like I'm trying to make a decent mapping. I'm probably going to throw $500 to $1,000 of risk out there and try to map out some levels. But even like yesterday, it's like I had 3 butterfly trades yesterday that were very close to winning a decent amount of money yesterday. And the net result was I walked away with a $160 loser. If I was right, we would have been talking a $700 to $1,000 winner on the day. It's okay. Like I accept that it's not going to be perfect. But if we're good enough, we have like I don't have margin for error in all these other services like I do here. Do we have margin for error with out of the money trades and waterfall? Of course. Project options edge margin for error? Of course, because we're way out of the money. But for zero DT trading, there's precision. There's, I mean, the life cycle of your trade is the day. Like from open to close, that is the trade from start to finish. There's no rolling. There's no second attempt. It's like I'm either right or I'm wrong. So at least if I'm wrong, I'm wrong and it's inexpensive. Okay. Yeah. Snapper says, feeling to the $5,000 double up. Oh, yeah. Steve says, favorite parts, recovery rate. Any losers don't hurt much. Yep. And that just gets the mindset. It just improves the mindset when you're trading. If you can stomach a loss and it doesn't bother you, you just go focus on another good trade. And mentally, that's a way healthier way to trade. Because what damages people is when you take a good strategy that's a high probability strategy and you take a loss. And then you're like, well, shit, that's going to take me 9 wins to make that back. That stings a little bit more. Now, granted, 9 wins are right around the corner, but it's annoying to take a loss like that. And you're like, well, now I got to claw back. So, and again, kudos to us for the loss we did take a couple weeks ago on daily profit play. And that was on my, like, I took way too many trades. I put in way more risk than I should have. Had I just taken the one daily profit play and then traded double ups to defend myself, I would have made money that day. As ugly as that Monday, Tuesday combination was, I would have made money that day. Didn't matter. Risk is on me. I accept it. But the end of the week, by Friday, I was positive. Monday was a winner. Tuesday, I lost. Wednesday, Thursday, Friday, I was a winner. I made money. It's fine. I clawed back. But if it wasn't for that balance of like the high reward, it's not that easy. So the recovery rate, like Steve said, is really important. All right, good stuff. All right, let's see what happens. Masterclass at 11:15. It's going to be a lot of fun, and it's going to be slower paced. Okay. Everyone talks about my live sessions in the morning, like, oh my gosh, it's so intense. And look, all my supporters, people that follow me for 10 plus years, you know that it's very consistent. We talk through strategies thoroughly. You're in the right place. But the nice part is when I can throw in these education sessions only, where it's not trading, like live trading and moving all over the place, just education, it's much easier to digest. Okay. And we slow it down, bring a bunch of questions, and I'm going to pop quiz you all day. If we're trading here, we want to build a butterfly spread here. You show me how to do it, right? Understand the reward and risk. Where's the break evens at? How do we know how this trade makes money? How do we manage this thing throughout the day? That's what we're going to walk away with today's masterclass. And says, can I register through one click? Well, if you're a member already, there'll be a alert in Telegram. I'll send a Telegram alert as well as a one-click trading link for the Zoom session today. But if you want in the class, just call the team. So you can email the team right now or call them right now and jump into double ups as a member. Cool. All right. There's my soft pitch of the day. I'm doing this again at like 1 p.m. That's the sales portion, and you're already going to be through the masterclass with me. So I thought might as well give you a heads up on it. If you want to jump in the masterclass right now, just jump on the phone with the team and get into it. Cool. All right. Okay, Doug, I saw your question there. You got to jump. Yeah, so we're pretty much set up for the day. Pending orders on daily profit play. I'm in a couple of butterfly spreads for double ups. Let's see if the markets can respond to some type of level. Ideally, I'd like to see if price can get to HVL or fresh lows on the day. If it's here for the entire day, I'm actually going to be pretty pissed. And again, could I offset that? Of course I can. How do I do it? Well, I put in another butterfly right here. The problem with this one is that's going to be my highest risk butterfly, which I say I don't want to do it. Not yet. If I feel like I'm going to be strong armed to doing it, I better have the evidence that 7670 or 7675 is going to have to be like the most obvious gamma level today. Because if it's not, I'm not that interested in that trade. So right now, my front runner is 7700. HVL is 7720. So I'd love to see price somehow hold this low, work its way back up to HVL, and maybe that's where we get paid today. Excellent day. Or if it bleeds lower and tests the lows at 60 and maybe breaches and gets down to a put wall at 50 or so, cool. Let's get some gamma down here. But it's to be determined. Right now, there is, if we have some volume into the close, we could see price going either direction. So, all right, I'm going to bounce. If you want to jump into double ups, 11:15 masterclass, I'll see you there. All right, thanks, everybody. We'll talk soon. Bye.